Well, hello and welcome to the second trading day of June, and it seems the local boss here is kicking off June in the red. Could it be because of the industrial action? That was the close right there, 0.18% down, and we see also the market cap also taking a hit, but we'll find out the relationship right there. But let's get to the top stories that set your agenda, starting with oil prices have eased today, extending losses from the previous session when prices fell to their lowest in 4 months. Investors are worried about supply ticking up later in the year. And there you have it, Brent losing that $80 level. Quite a big drop there, 0.3% for Brent. WTI crude, $74. So we're seeing we're seeing this prices moving close, at this time, Brent and the U.S. grade WTI. So we've seen a big drop there, 0.2%, $74. So now, looking at the psychological level for $70, that's for WTI at this time. And yeah, the fuel queues, sadly, the fuel queues are back again. On my way to work this morning, it was right there. All the traffic, and congestion coming from the queues this morning, compounding the stress of Nigerians at this time. Definitely, everyone's taking a hit. No light all through yesterday. That's talking from personal experience at this point. But we're seeing the fuel queues back again. You can let us know what it looks like in your area. You can just share with us on X, Channel CV. There, then we'll get to share your own experience. All right, let's bring it back here to the FX market. In the currency market, we see appreciation. That's a bright spot right there. With the industrial action, we're seeing appreciation for the Naira. 1,489 Naira, that's for NFM. That was a close yesterday. 1,476 Naira to the dollar. That's what we had for NAFEX. So we're seeing appreciation, right there. Naira strength with the industrial action at this time. Quite interesting. Well, to some company news now, we see listed energy giants, Resurface Power PLC, signed a partnership with German multinational technology conglomerate Siemens Energy to expand the capacity of the indigenous power company. In a statement sent to the Nigerian Exchange Limited, Resurface says the MOU, which was signed in Berlin, aims to ensure sustainable, resilient, and efficient power generation while safeguarding the longevity of assets. And this is all aimed at supporting the growth and sustainability of the Nigerian electricity supply industry. The chairman of the board of directors of Resurface Power PLC, Mr. Femi Otedola, led the Nigerian company's team, while the managing director for the Middle East and Africa, Mr. Dietmar Siadasfer, led the Siemens Energy team. And finding a balance between government's position and capacity to pay and workers' consideration of economic realities may bring much desired solution to the ongoing impasse between both parties. The chief executive officer of Financial Derivatives Company believes that 90,000 Naira may be fair value after considering the perspective of the government and labor. Take a listen.
When we did our math and my projections the other day, I said, if sum of 90,000 Naira could be fair value, as long as the federal government in its programs, in the what they call the stimulus package and fiscal incentives, is able to incentivize the private sector and small businesses to be able to meet this minimum wage. Without that, those businesses are going to have to retrench people. So after considering all of that, I thought that 90,000 Naira could be a landing point because the consequence of a disruption in the business of the country, both at the public and private sector levels, could be it could be a very expensive exercise. So I think right now, if going from 60,000 Naira to 90,000 Naira would be good, but if you take 90,000 Naira, it is 200% of what the 30,000 was 5 years ago, right? So 200% divided by 5 gives you 40% a year. Has the inflation rate been 40% a year? No. So I think it's fair that we can now begin to negotiate from 90, but I'm not sure that state governments, local governments, and others can afford that. But somehow, because their revenues have increased sharply because of the reduction in subsidy, because of the increase in tax mobilization, because of all other factors. It should be possible that the federal government will help subsidize the states and local government, and also help with these intervention programs to actually soothe the nerves and the pain of the small businesses and the ordinary man. That way, we bring some kind of equilibrium into the collective bargaining process.
And the debate continues at this point. What should be the ideal minimum wage for the average Nigerian worker? But let's chew on some data now from StatiSense. How much could the minimum wage in 2015, how much PMS, liters could you buy at that time? And there you have it. 2015, you could buy 207 liters of PMS in 2015. Fast forward to right here, 2024, you can just get 43 liters of PMS with the current minimum wage. That's excluding the wage award. There, we see minimum wage of top oil producers in Africa. Let's compare. How are the African brothers, how much are they paying for minimum wage? That's some other oil producers at this time. We see Gabon, 376,000 naira. That's what they pay minimum wage there. They're also an oil producer like us, Equatorial Guinea, 323,000 naira. Libya, 313,000 naira. We have Algeria there, 226,400 naira minimum wage. Oil producing countries in Africa right there. We have Nigeria at 30,000. So let that data sink in at this time. Joining me now is Mr. Sam Chidoka, Managing Director, Kairos Capital. Great to have you on the show. Good morning.
Good morning and good to be here. Hi, Ladi. How are you?
Fantastic. Always great having you. So it's day one of the industrial strike. That's done. Flights grounded, national grid shut down. Day two. We're here now. How are you seeing this unprecedented? Did you expect this minimum wage negotiation would be smooth somehow?
Well, I would say these negotiations are never smooth. It takes a lot of bantering to get to what one would perceive as an equilibrium pricing in terms of labor and government conversations. But for me, looking at it, I think that both sides have to be considerate in agreeing on what the new minimum wage would be. On the government side, I think there's something about signaling. There is something about when those in government officials seem to be living large, as it were. I mean, recently a video was circulating on WhatsApp when the president was in Lagos, and you could count 30 SUVs in his convoy. Those things send the wrong picture. When ministers go around with long convoys, senators, the presidents, governors, and people in offices seem to be spending money that the average man cannot spend, it gives the impression that we have this money and it's just that it's being spent wrongly. That's on the side of government. So I think the optics, because we know, those of us who look at the economy and look at government expenditure, government income, know that we don't have enough money to pay 494,000 minimum wage. And again, on the side of labor, it is to flip it and remember, when you say 494,000, it's the minimum wage, it is the lowest wage, and then you now begin to cascade upwards from that. So maybe by the time you get to a director's level, only God knows how much they are opting for people to be paid at that point in time, right? So there has to be a balancing, because the more you increase the minimum wage, what would generally happen is that there would be a drag along of inflation as well. And what's going to happen is that over time, the inflationary pressure would take away what you have earned. I dare say that if government pays 500,000 naira as minimum wage in this country, in 3 months, the value of that 500,000 naira will be wiped out by inflation. Because what's going to happen is that there will be pass on. I'm an employer of labor, and I can use myself as an example. If I have to pay 500,000 naira as minimum wage, I will pass on that cost to my clients. If that's my clients that I offer financial advisory and capital raising services to is in fast-moving consumer goods, it will pass on that cost to the end users as well. and then it's just a circle that keeps on going. So whether it is 500,000, whether it is 90,000 like suggested by Bismarck, or 60,000 as government is offering, I think the more important question is the value of that money in country. All these comparisons with other countries and with dollars, we don't spend dollars in Nigeria, we spend naira in Nigeria. What is the value of 60,000 in Nigeria? What is the value of 90,000 in Nigeria? What is the value of 200,000 in Nigeria? I think that should be more of the conversation. So again, I'd say government, the optics is not right. Labor, I think that 494,000 is a bit on the high side. You cannot grow minimum wage by over 1,000%. It's just will spiral inflation.
Right, and I'd like to get your own perspective. What do you think is that sweet spot? What is that right amount you think will make sense, as minimum wage, at this time? I'm talking about optics, from the government. What do you think the government should be doing right now to send the right, signal, at this time to show that they actually feel what the average Nigerian is going through?
So the first question about what I feel is the right amount, I think that it should be a graduated amount. I don't think that we should have a fixed amount for minimum wage and that carries on for many years. I think that should be minimum wage should be increased by a minimum of 150% right now. And there should be a plan to constantly look at the minimum wage and seek to reflect it and make it not just a minimum wage, but a living wage. So I would say, look at 100% to 150% increase at the immediate. So anything between 60,000 and about 75,000 thereabouts on the immediate, right? But that conversation needs to continue. You can't move it and just stay stuck there. Even in the private sector, issues around wage and wage adjustment are concerns that we always have and conversations that we always have.
Right.
On the government side, I think that the optics is just all wrong. Maybe the president needs, and governors and people in office need a special advisor on optics. The optics is wrong. These guys look fat, healthy, flying private jets, driving around in convoys, driving brand new cars, imported SUVs. It just looks like they are balling. And the rest of us, the common man on the streets, just is suffering the pang of all the economic things that are happening around us. They need to step it down. The optics is all wrong, from the president to the vice, to the governors, to the ministers, to the senators, to the House of Assembly members, to everyone appointed into government. I like to see them drive made in Nigerian cars. I like to see them stop the convoys. I like to see them stop flying the private jets. I like to see them readjust in line with economic realities. We can't have inflation at 33%, food inflation at 40%, and people are balling in this nation.
Right. I guess the federal government should just stop balling, at this time with the macroeconomic realities right now. But looking at interest rates, MPR 26.25%, inflation 33.69%. Now to compound matters, we have an indefinite strike on our hands. How much can the Nigerian economy take at this time?
I think that we all, government, labor, everyone needs to come together and realize that the Nigerian economy is almost on life support at the moment, and that this economy, if we push it, the economy might as well just give up, and we are going down a place of ballooning inflation and just not being able to run the economy efficiently and effectively. For us to ground all form of economic activities, a friend of mine shared with me a story yesterday. The wife gave birth yesterday, and whilst the wife was in the theater and she was being operated on, the labor unions came to stop that process, came to stop that operation in the middle of his child being birthed. I think that's inhuman, and I think that that's taking labor issues a bit too far. So the economy is, yesterday, we didn't have power for 20 hours. Flights didn't fly. Hospitals, government hospitals on a shutdown. Fuel queues are back. All of this, GDP was 2.9% growth in Q1. Q2 is going to be worse if we continue like this. So there's a need to quickly arrest this, both on the side of government and the side of labor. They need to sit down. I'm happy to hear that both parties are willing to concede and willing to sit down and talk. I hope they can suspend the strike and continue the conversation and not push this economy to the brink of collapse.
Right, I do hope the conversations don't also, tarry for too long at this time. But let's look at the markets now. First trading day of June kicked off in the red, and definitely this is playing into, investor sentiment right now, local and international. How are you seeing it so far, and how's this going to impact the Nigerian market and the Naira, even though we saw a strengthening yesterday?
Well, so the equities market is being affected by a couple of things. The first thing is the increase in MPR. So when you have your base interest rate at 26% and the federal government is issuing treasury bills at a yield of 26%, corporates are issuing commercial papers, fixed income papers, 270 days at 30%, 180 days at 25%. It makes common sense that people are going to rejig their portfolio and move investment from an equity side to a fixed income side. Just imagine that at no risk, you get 26% return. Why do I have to take a risk? It's a no-brainer. So the equities market is struggling and will continue to struggle as long as fixed income market is making this kind of return. That's on the one side. On the second side, when we have all these strikes and some of these macroeconomic issues happening in the country, it becomes difficult for people to want to go long term. Most people want to go short. And when people are not willing to go mid to long term, the equity market will struggle as well. Add that to the fact that the banking subsector has been the major driver of the equities market. The news that Heritage Bank license has been revoked might send some shivers down the spine of some investors who might decide also to pull back. So there's a lot of things happening around us, the economy, the banking subsector, the fixed income side that is basically affecting the equities market at this time. So, of course, there's no shock that the market has started on the red.
Right, definitely. And, with all we've seen so far, and we're getting to the first half is almost over of 2024. Do we just say don't expect much growth for 2024 for the economy?
Well, for the economy generally, I don't think it's too late for 2024. I think we still have time to turn it around. We've only done less than 50% of the year, and there's an opportunity to take the right decisions and turn it around. I think that the monetary policy operators are doing the best they possibly can. The worst thing they can do is to do nothing. And so you see them pulling all the strings of monetary policy instruments that they can use. But I feel that they haven't gotten enough support on the fiscal side. If we can get that sort of support from the fiscal side and also on the monetary policy side, perhaps we can arrest the negative sentiments and negative indices we've seen in the economy. Maybe inflation can begin to come down. Maybe the base interest rate, MPR, can also begin to come down. And we can see reactivation of productivity and lending to the real sector that allows capital formation and allows growth in the economy. And maybe for Q3 and Q4, I think that Q2 is not going to be any better than Q1 in terms of how we performed so far. However, there's opportunity to get it right in Q3 and Q4. And I don't envy those who have to take those decisions.
Right. I guess all hope is not lost at this time. It can still be done if we follow the right policies going forward. Thank you so much. It's always great having you, Mr. Sam Chidoka, Managing Director of Kairos Capital. Thank you so much.
Thanks for having me. All the best.
All right, we'll take a break now. When we come back, we'll drill down into the commodities market. That's the moment. Just stay with us. All right, for commodities market update, we have Desola Simoni, Senior Analyst at Financial Derivatives Company, joining me via Zoom. Great to have you on the show, Desola.
Thank you for having me on the show, Ladi. Thank you for having me.
Yeah, so how you see it? We see the Naira there appreciating at the close of trade yesterday, even though we had the day one of industrial action.
So I think that is due to like a few factors. Number one is the central bank's intervention in the markets. In the month of May, we saw the largest intervention year to date. The central bank sold around 575 million into the market. in the month of May, which is more than what we saw in the previous 2 months, which was April and March, are combined. So that kind of improved liquidity in the market. We also saw the new rules where the central bank now allows international oil companies to sell some of their dollars to the FX markets. Previously, they were only allowed to sell those dollars to the central bank. So these two factors, I think, are helping improve liquidity in the market and helping to strengthen the naira. However, if despite the 26% monetary policy rates, we are not yet seeing such huge inflows into the foreign portfolio market. We are not yet seeing as such foreign investment. I think foreign investors are still kind of they develop cold feet, I think, or they are just kind of taking a cautious approach towards investing in fixed income markets in Nigeria. Right,
definitely. We know Warren Buffett says invest when investors are fearful and run away when they get greedy. I guess there's no more fear. There's no more fear than this, at this point. Well, let's look at the global oil market. We're seeing weakness right there. WTI looking like it's going sub $70 at this point. Even Brent's below $80. What's driving sentiment in that market?
Indeed, at the moment, I think the market is still trying to digest the news from OPEC Plus. Over the weekend, OPEC Plus had a meeting on their production cuts, and they agreed to extend the production cuts up until October. But after that, they will see some phased increase in output over the next 12 months. And this news was kind of welcomed with mixed reactions, with most analysts saying that this is bearish for the markets, particularly because we are still in an high interest rate environment. The optics for oil demand is quite weak at the moment. And with, increase in supply, I think the outlook is looking quite bearish for oil prices, and analysts expect that oil prices will begin to trend downwards towards the end of the year.
All right, let's look at cocoa prices now. Before now, about a week ago, we saw prices were actually coming down really hard, but they're going back up again. What's driving them up?
Yeah, so this was driven mainly by technical factors. Essentially, we got a report from the International Cocoa Organization, showing larger than expected deficits in the global cocoa market, particularly coming from the two largest growers in West Africa, Ghana and Ivory Coast. We are seeing shortage of supply or production, shortage of supply and exports coming out of Ghana and Ivory Coast, and this is even larger than expected. In addition to that, we are also seeing so that's the main factor. The report showed that production is down 12%. The outlook for production, we expect production to be down 12%. In addition to that, we also expect demand to be down by around 4% to around 4.4 million metric tons. So essentially, that's just the sentiment those are the factors driving sentiment in cocoa markets at the moment.
I guess that's a plus for Nigeria this time. We're also a cocoa producer. Even though the prices going down did impact the farmers here, but now we're seeing improvement there. Are our farmers positioned for this gain?
Indeed, yes, indeed. Nigerian cocoa farmers would stand to gain from higher cocoa prices, provided that they can meet the standard of exports. Because the only way they will enjoy, the only way they will reap the benefits of these higher cocoa prices is if they can export these products, and there are strict standards to be met. Previously, we had some issues with Nigeria's cocoa production in some of the growing regions. They were too small, they were substandard. There were issues around swollen shoots diseases, which kind of restricted output. But if they're able to meet the export standard and export, I think it's positive for Nigerian cocoa farmers.
Right, all right, definitely. It's day 2 of industrial action right here, and we're all hoping, they come to some kind of resolution, soon, so that this can end. But if it continues, this week, what's your outlook for the naira? Does the CBN have enough to defend it, at this rate?
So I think the costs in terms of economic activity, it will be quite huge, I think. And I don't know, given, inflation at almost 30-year high, given the tight interest rate environments, given slow GDP growth rates. I'm not sure if Nigerian economy is able to withstand this industrial action much longer, because right now people are hungry. Soon they will be angry, and then if that anger persists, then it's going to lead to unrest, and we don't want it to get there. So it is my hope, it is the hope of every Nigerian that the labor union and the federal government can come into a resolution real quick that would involve some compromise on the part of both the federal government as well as the labor union to reach a resolution real quick, because at this point I think the situation is quite desperate and is more dire than we think. All
right, we'll keep tracking to see if we'll have some kind of consensus, hopefully this week. Thank you so much. It was great having your perspective. Desola Sumoni, Senior Analyst at Financial Derivatives Company. Thank you.
Thank you for having me.
Yeah, so definitely we're checking out the close for the market today. We'll see if bearish sentiment continues, or maybe the bull might actually make some kind of appearance today. That's it from me on Business Morning. We get a summary later today, and definitely looking at yesterday's close, that's for the NGX. We did see weakness even with volume, and we'll be seeing if investors might come with some kind of cherry-picking attitude there. We see volume there, 349.59 million. That was traded yesterday, but the value was more at 5.24 billion. Deals, 8,082. Much more than what we had last week, Friday. Now, if we also check the top trades for the market, we see the likes of Veritas Capital there, 57.95 million. That's what was traded yesterday. GTCO, 47.63. Access Score. So we see financial services again dominating most of the trades on the NGX yesterday. And we also keep an eye on the fixed income market at this time, knowing that when there's some kind of uncertainty, we see investors try to go to the safe haven. And right here, that's what we have, the fixed income market. And Mr. Chidoka did talk about 26%, about 25% being very attractive right now. No risk. Everyone's looking for, no risk, at this point. So definitely be interesting to see how the market reacts this week. I will definitely get a summary that's on Saturday on Capital Market. Most of the issues still unfolding at this time. What's going to happen with labor and the federal government? What amount are they going to agree on at this time? Which one is closer to reality? We'll definitely find out. That's it from me on Business Mornings. Back to the Sunrise Daily team.